Hey YouTube, how you doing? It's Glenn from Glenn's Car Collection. Today I'm going to tell you all about car insurance. Let's say whether you have a modern car like the M2 or a modern classic like the 993 Turbo, you need to insure it. So one of the things that's going to determine your cost for insurance is going to be your driving record. Another thing is going to be the amount of claims on your particular car. Okay, so unfortunately, if you have a two-door Honda Civic, and a lot of those cars maybe get into accidents or get stolen, the insurance may actually be higher than if you have a new Corvette or a new Porsche, because it's going to go by the drivers, your neighborhood, what zip code you're in, stuff like that, your driving record if you have tickets and accidents. A modern classic like this, you can insure one of two ways: with regular car insurance, like I do say on the M2 or the GLA over here, or you can get agreed upon value coverage, which a lot of people call classic car insurance. For agreed upon value coverage, your car does not have to be 25 years old in what's considered a classic. This car is actually now 20 years old, and I have agreed upon value insurance. So you know what the difference is. The advantage agreed upon value, if you have say a classic or a modern classic car, is that if something ever happens to your car, you'll get that agreed upon value. They won't depreciate it. So let's say you had, I don't know, State Farm or Allstate or something for your Turbo, and I'm totally making up numbers, say it was worth $150,000. If you got into an accident with regular insurance, you're not getting $150,000. They're going to depreciate it no matter what the car is worth. They're not going to necessarily give you the value for the car. They're going to depreciate over a certain amount of years that you've had it, and maybe you'll get a check for $90,000 on your $150,000 car. The advantage of agreed upon value insurance is if you insured this car for $150,000, if anything happens to it, you'll get a check for $150,000, no questions asked. Now, for agreed upon value insurance, there are a lot of stipulations. You can't take it to work. It's got to be garaged. You have to prove that you have another car as your daily driver. You can't take it to work. I think I already said you can't run errands with it. So it's basically for pleasure driving only. So if you were driving this car to your car show, your wife or girlfriend says stop at the ShopRite on their way home to get some milk, you couldn't do that and be insured with this car. So something to keep in mind. Also, if you insure this for a high amount, $100,000, $150,000, whatever you want to insure it for, they have to agree. So you'll show them pictures. If there's any modifications, you'd have to tell them about it. But you're going to pay more since you're getting that whole check for $150,000, whatever you insure this car for. Your premium is going to be a lot higher. So I bought this car about 3 years ago when the prices were cheap. It's gone way up in value since I bought it. I didn't buy it as an investment. I bought it because I love to drive it. And, my insurance doubled in that time also because I have agreed upon value insurance. And as the price went up with the market of this car, I had to keep raising the value of the insurance to keep up with it. Because the last thing you want to do is, get a check for half the amount because you never raised the insurance. So agreed upon value, I would highly recommend. It doesn't even have to be, you could do it on a modern car. I had a 2008 Cayman S, and I believe you can even get the agreed upon value insurance for that. So it doesn't necessarily have to be a classic. It just can't be your daily driver, and it has to be garaged, and you're not using it for errands or work, okay? So that's one way to hold the value of your car. It's not necessarily a cheaper way, but if something ever happened to your car, you would get the full value for it. But again, you're paying that in the premiums. All right, so just wanted to give you some samples on that so you can help out for your insurance. Shop around too. I had for my regular cars, I had an insurance company forever and thought I was getting good rates, and I switched to another insurance company and almost cut my insurance by about 50%, because every year my regular carrier would raise me 5%. And over a bunch of years, even though I had no claims, I never had an accident, never had a speeding ticket, after like 10 years or so, my insurance is way higher than it should be because they were just raising it 5% a year automatically. So I switched insurance carriers, which you can do anytime, and now my insurance is a lot less. All right, so you have any questions, let me know. Drop a comment below. Be sure to subscribe to this channel. Share these videos with your friends so we can grow this channel. Thanks, guys, for watching, and I'll be talking to you soon.